Hey everyone, me Kevin here. Welcome back to another market closing live stream. So here's the thing. I feel like we have reached the end, and I want to have a little discussion about that. So, look, stock market has had a lot of negative catalysts come to fruition within the last few weeks here, including a pretty dang soft jobs report today. Yet the markets are kind of still taking every bit of negative news in stride, which is somewhat incredible. We do have the Nasdaq down about 0.25%, the S&P pretty much flat, and the Dow Jones up about 0.16. So Russell 2000's down about 0.41. So you've got some of these lingering pain points, but I really think that once we get the CPI report next week, which is in 3 trading days, we are going to be at the end of negative catalysts for at least 2021. Sure, we're going to have a little bit of a budget and debt ceiling discussion in December, but the infrastructure stuff's going to be passed by then. We're going to have a 1 to 1.2 with maybe $1.5 to $2 trillion infrastructure package that gets passed. We'll know about our new tax implications, which I feel like markets have already factored in the worst. And really, this will pave the way for, in my opinion, a new level of discipline that we need to bring to markets. And see, it is easy, folks. It is easy to invest when things are going up. Any idiot can invest when stocks are going up. And then while they're trend lining up, go, haha, see, look, I'm making money. Stocks are going up. Well, duh. A real investor is the person who doesn't panic when things are red, is the person who adds when things are down. That's a real investor. And so that's where I think we might be transitioning here into this phase of a potential lack of negative catalysts where we could keep buying the dip, and we might actually be facing the end of buying the dip for 2021 here, and we'll have to see what new catalysts come up. Unless, of course, we have this insanely horrible CPI read next week, and barring any kind of insane news, I think a lot of our fear catalysts are now behind us, and the buy the dip phase is over. We're at the end of it. And now we're at this new beginning. And the new beginning is, okay, how do we now maintain discipline to maybe potentially go shop where things have yet to recover? And then be prepared for the future markets, which that's difficult because looking into 2022, what are our new catalysts? We don't know yet. We aren't able to see that far yet. We've got interest rate increases coming, potentially one towards the end of 2022 in the second half, and then a couple in 23 and 3 in 24. But I think really the next big catalyst that I could see between, it sounds crazy, but the next big one beyond inflation after Wednesday of next week, after that, the next big catalyst is going to be the 2022 election, because the 2022 election is going to provide that clarity as to, okay, are Democrats going to maintain full control, or at least this pseudo full control, we can call it, with a tie in the Senate? Or are Democrats going to lose power in potentially both the House and the Senate, leaving somebody like Joe Biden powerless for his last 2 years and potentially setting up for a Republican president in 2024? So that's going to be a very big catalyst, and I think the next uncertainty catalyst. In fact, if you want to do something that I think would be very smart to do, it would be open up your calendar right now and go to about October 15th of 2022 and write down likely time of heightened fear and falling stock market, and then set an alert. And let's just see what happens. Pick a weekday. I don't know if the 15th of October of next year is a weekday, whatever, who cares? Actually, it's probably a Saturday. So pick the 14th, whatever. And write down heightened fear, because it's going to be right before an election cycle. Those are the times to be investing. And that's why I'm saying we might be at this end of a period of buying the dip, and really this new period where we have to exert a lot of discipline again. And it's hard. I remember in January of this year, people were asking me, Kevin, how come you're not buying a lot? And it's like, well, I'm saving cash. And then I started selling stocks the first week of February and the second week of February. And people were like, Kevin, you just sold $1.5 million. Why are you selling and you haven't been buying? What's going on? And then the market goes haywire between the middle of February and May. And it was a great time to go shopping. I bought a lot of stocks. It was the same thing that we did here in at the end of September and the first few days here of October. And I'm all in on that. I love buying those dips. But these are the hard times where when stocks are just ripping or they start ripping because catalysts go away, we ask ourselves, okay, like at what point do we just wait, right? And sometimes it's frustrating because honestly, I believe a company that has absolutely been killing it, like Affirm, has the very real potential of surprising all of us and running to a $200 stock. And people think, oh my gosh, that's nuts. It's a buy now, pay later platform. It doesn't have a moat, whatever, this, that, whatever. I completely disagree, which is obvious. I mean, I've got like a $1.5 million in the company. It's at a $38 billion market cap right now, which I think is, which I think is a little lofty. But there's this potential that the stock market just prices in so much enthusiasm for this company over this winter holiday cycle here, where Amazon, Walmart, Target, and all these companies are now working with Affirm to get people to spend more money now and pay for it later. It's really the merchant relations that creates Affirm's moat. Another buy now, pay later platform can't come in like Square or Square's Afterpay, PayPal, or whatever. They can't just swoop in and pull off what Affirm has done, because Affirm has those merchant relationships, which is so much harder to cater and to get that branding on their websites. You go to Target, you go to checkout on StubHub, right? These are hard things to create. That's your moat. The concept of buy now, pay later, that part's the joke. Hey, that kind of rhymes. But anyway, look, I mean, it is possible that Affirm could be one of those companies that just keeps running. I wouldn't be surprised if we added another 50% to this stock, we're somewhere at a $53 billion market cap before the year's over, and this is a $210 stock. It wouldn't surprise me. I might be tempted to start taking some profits on the darn thing, because it'll start becoming a little bit too heavy in the portfolio. But I mean, personally, I'd rather the thing go down so I can go buy some more of it. But the markets don't always do what you want. So this is going to be the period of time where we go into discipline mode, in my opinion, as catalysts wear off. And sometimes that can seem like it's a little bit more boring, but it's actually one of the more challenging times, because you're really looking at your portfolio feeling like you have to do something. And sometimes the correct decision is nothing, or it's put options, like short-term sold put options. So, for example, this morning I sold some puts. Actually, I sold a put and I bought a call in various different stocks. And so this is that kind of time where you look and you go farming and you wonder, like, okay, where's the leftover opportunity? This isn't the one, but I'm just going to look and go like, hey, is there an opportunity with Lucid now breaking its lower channel over here? Is there now an opportunity to sell puts in Lucid? And it comes down to a factor of, well, what's volatility been doing? What's your historic what's your outlook for the company? And do you see it as a longer term investment that you want to own? And there are plenty of these companies that are still lagging, really the broader market, where you wonder, like, do you have opportunities to go shopping in these? For example, DraftKings is a company that I've been looking at. I don't know much about the therapeutics, but I certainly hear everyone loud and clear that CRISPR is sitting on our support line over here. We looked at that this morning as well. Roblox heading back to IPO pricing, going well within its channel over here. Camber gave up its gains for the day. Hippo in the insurtech space has been, it's been bleeding out here the last little bit, and we're coming upon this lower support level here of somewhere really around the upper threes, where we really don't expect something like Hippo to exceed that sort of level. But then again, all it takes is a short seller report like what Owlet had, and you end up plummeting after your bleed here. You end up plummeting even further. So where it is right now is about where I bought into Owlet, somewhere around 420. So it hasn't really moved since I bought it. But then again, I did buy it after the short seller report because I just love buying stuff when some dumb short seller comes around and tries to slap it. And it's not just the short sellers; they had the FDA letter as well. But you have all the law firms, the vultures circling now, right? So and Owlet's a great company, yeah, no doubt. So but anyway, this is that time of the market, I believe, or certainly at least starting Wednesday, where that discipline's really going to have to come back in. We're really going to have to go look and scrutinize. Okay, do we want to go in on something like a Canadian Solar? It's look how low it is right now relative to 2021, right? We began 2021 here with this energy company, and this thing was $56 a share. We are now below October of last year's pricing. We're sitting at a measly $32 a share on this company. I mean, this is approximately, what would we say, somewhere around September of last year's pricing. And before that, you had a bunch of resistance at about $26. So it's like, what's your downside here? 20% maybe, but your upside seems like it's much larger. But again, you've got this big supply shortage crisis, and that's where I think becoming a little bit more discerning is going to be important again. See, I did lots of buying over the last few weeks in some larger buys in sort of baskets or like pies of stocks. And that's because really everything was on sale. Now we go into this phase where you can't just do the everything dip. That's over. It's the end for that. The everything dip is over. Now it seems like we're in this phase of, okay, we've got to be a little bit more discriminatory, find some of the leftover pain points in the market. And I think some of those that we wrote down, for example, would be things like Shift, Rocket Mortgage, United Wholesale Mortgage, Honest Company, Hippo, Lemonade, potentially Matterport Lucid, although Matterport's been doing pretty decently, right? These are some, maybe even Disney, if I didn't say ChargePoint, Canadian Solar, some of these leftover ones. I don't know. And that's where it's going to take some time and a little more methodical research to see why maybe they might be left behind. But very, very excited about the market and these catalysts going away. Very happy. I did what I said I was going to do, and I bought a lot of the dip that we had. And I do think we still have some potential Delta fear headwinds. I don't know how much pain we're actually going to get from Delta. Dave & Buster's, for example, down 5.5%. In my opinion, something like this would be down 5.5% on some sort of fear that that Delta is going to come back stronger. But then again, you've got Square down 4% on no news. Could just be the state of the market being somewhat tentative because of the jobs report today. Today could be somewhat unique in that. Lemonade down 2.47%. I do believe that today through Wednesday, we could still see some red. And I think that's really why I wanted to make this sort of introduction here as well, is just to say, like, hey, take advantage of the fact that we might still have red between now and inflation data. And if inflation data comes out pretty red, it's going to be another nice opportunity to buy the dip. But after that, if all these catalysts disappear, which so far they are, and we get larger sort of larger rallies and less by the dipping, well, then it's a matter of being discriminatory and finding those individual deals. So, and of course, as usual, always remember you can get every single one of my buy sell alerts for crypto, stocks, options, sell puts, whatever it is. But join the Stocks and Psychology Money group. You got lifetime access to the lectures in that group and the private live streams where we can do Q&A. But for now, let's go ahead and focus on some of the headlines. And we've got about 11 minutes left to go before the close. Let's go ahead and pull up CNBC here. We've got the Dow Jones only up right now 4%, so barely up. We're almost red across the board despite volatility declining at the moment. We have, let's see here. Okay, let's go ahead and look at some of the headlines here. Bloomberg. All right, let's see what we got. Biden celebrates drop in unemployment even as job growth weakens. Yeah, come on, man. Come on, man. The drop in unemployment was because of a seasonal adjustment in educational work, not because of a good jobs report. The jobs report was a disaster. I personally would not be cheering this jobs report. I would have used this jobs report as a, see, this is why we got to do more work. This is why we got to pass my Build Back Better plan or whatever. I'm surprised that Biden is cheering this. Although then again, maybe I should be unsurprised given that that's how politicians operate. But whatever. So, all right. Biden celebrates drop in unemployment. Right. McConnell's grip erodes as Trump tugs GOP senators to his orbit. That's an interesting argument that maybe Donald Trump is having a little bit of an effect, robbing power from McConnell. I don't know about that. I think this last move by McConnell was really a power play by him, giving the Dems a little bit of leash. All right. Let's see here. Barron's had a piece on Affirm. I figure we may as well take a look at that. All right. Let's see here. There is an Affirm article on Barron's. I saw it somewhere. Yeah, here we go. Affirm stock soared on its target partnership. It's not good. The good news the market thinks it is. Ooh, okay. The stock climbed for a second consecutive day Thursday, and today, within the buy now, pay later provider as it heads into the holiday season. The company's stock rose 20% on Wednesday. Big box retailer announced new payment options for consumers through partnerships with Affirm and its smaller peers, Sezzle. All right. So Target said consumers would be able to pay for purchases over $100 in monthly payments through Affirm's technology, while Sezzle splits it into 4 interest-free payments over 6 weeks. Target's blog post may have sent the stock soaring, but some, including Morgan Stanley, have noted that the tie-up isn't new. Affirm and Target have been working together since 2009. This is a fact. Affirm has been showing on Target's website for quite a while. And it is a little surprising that things moved on this. While there's a good chance Target is expanding availability with this launch, and we did notice Affirm's new adaptive checkout, we still see the reaction as overdone. I mean, I personally disagree with this. I think well, one of the things here with the adaptive checkout, one of the things that's so unique about their new checkout model is that now, rather than the entire cart having to qualify for Affirm, individual items can qualify for Affirm. I think that's super incredible. And on top of that, you're really in this place where Affirm is working to bridge the gap between the in-store and the online. And I think that is such a big opportunity for a company like Affirm. We saw them do this when they took over Walmart's layaway program. I think it's absolutely brilliant. Affirm's reps told Barron's, "We are pleased to partner with Target to empower more consumers with flexible, transparent pay over time options. More than half of Americans are interested in using this sort of service." Okay. Buy now, pay later concept is experiencing a boom, particularly amongst younger people, and some of the industry's biggest names have expanded into the space. But keep this in mind, this is so different. Right here, the references, they say PayPal launched its Pay in 4, Sezzle does Pay in 4, Square's Afterpay does buy now, pay later, but it's not just that. And that's, I think, what folks miss is when you do a deal through Affirm, and Affirm has a set relationship with the vendor, Affirm might be able to offer you 12 months, 24 months, 36 months of financing on that TV you're going to buy on Amazon, or that bed frame you're going to buy from Target, or the stroller you're going to buy from Target, whatever. That's different from Pay in 4, because remember, Pay in 4 is not pay in 4 months. It's pay in 6 weeks, which is really no payment and then payment, right? Like every week or every other week. And in my opinion, Pay in 4 is really no different than just swiping your credit card and paying it off by the time it's due. Because if you think about it, if you swipe your credit card now on October 8th, and let's say your billing cycle doesn't close until October 31st, then your balance on your credit card actually goes up, and you might not have to pay that balance on your credit card until not November 1st, but December 1st, right? So in effectuality there, I got 5 weeks of no interest just because of my credit card billing cycle, right? And so that's big. That's huge right there. So why do Pay in 4? Like Pay in 4, in my opinion, is kind of stupid. it's the same. I mean, maybe it creates a little bit more discipline for folks because you can just, maybe people will be more disciplined than with a credit card to actually pay it off. But why do pay in 4 when you could do so much more? Oh man, that should be an ad right there. Why do pay in 4 when you could do so much more? I don't know. I mean, let's try something here. Let's do an expensive stroller or something like that. And again, it's not a matter of Zezel going public that's going to create real competition. It's about the merchant relations. That's what really matters. So Zezel, for example, does targets what's it called? Makeup lines. There's a word for makeup. I don't know what it is. I don't know. There's some sort of fancy word. Who cares? Whatever. Cosmetics. That's it. So I don't know. Let me find some palettes here and makeup palette, something that would be a little more expensive. So give me a more expensive makeup palette here. I don't know. Find me something good. Let's see here. My goodness, there's just nothing expensive. Okay, here we'll go to the $50 to $100 range. I'm pretty sure the cosmetics are all Zezel. See there, four payments as low as $15. Well, who cares? Again, this is just like you may as well just use a freaking credit card. Like really, I don't care. And so I'm going to go in here and I'm going to go ahead and look at this stroller. And when I go check out this stroller over here, I want to look at this Affirm thing. Look at this. Look at these options I get here, folks. Look over my head. Here, I'll just remove myself, okay? Make easy monthly payments over 3 months, 6 months, or 12 months. Check that out. 12 months of payments at $29. Come on, I need a new stroller for my kid. It's $316, $29 a month. I can do that. Dude, this is so much better than paying 4. Now, it's expensive. Don't get me wrong. Like, you're paying more for it. You're paying 20% interest here, right? But for some people, that's their only option. And then certainly it depends on your credit score as well. So it doesn't necessarily have to be 0% financing. But for some folks, this is a good deal and it gets them paying it back. This is like a credit card, right? This sort of interest rate. But again, the whole pay in 4 thing is ridiculous. No, Luke, the pay in 4 is not 2 months. It's actually a pay in 45 days. Zezel themselves says that it's a 45-day thing. So I don't know exactly how they set it up, but it's 45 days. It might be a payment due first day, right? And so that way your 0 point is actually your first payment, right? But it's 45 days, which I just mentioned is the same as using a credit card. Because again, if I make a payment on October 8th, and my billing cycle doesn't close until October 31st, and then my bill's not due until December 1st, that's effectively 45 days of 0% interest, right? I understand that pay in 4 is 0% interest. So is a credit card if you pay it by your due date, right? That's what's so interesting about that. Now, the cool thing that Affirm does also is they do 0% interest on certain products. And so that's where the merchant relationship comes in again. So very, very cool. So yeah, I love that about Affirm. But yeah, some products are 0% interest. It's when they have a merchant relationship that you get those what's it called? 0% interest on certain products, merchant and product relations. But again, you can milk your credit card for 0% interest. Even if your credit card's like 25% interest, you don't make a payment on it for 6 weeks. That's basically 0% interest for 6 weeks. It's literally no different than paying 4. It's just setting you up. So when I hear people say, oh, paying 4 is somehow competition to Affirm, I kind of laugh that off because it's not even close. Like the Affirm buy now, pay later model is set up for giving people 3, 6, 12, 24, 36-month options to pay for products. And this is what I can't wait to see on Amazon.com. That's going to be big for Amazon. And so we'll see where this goes. But yeah, anyway, so that gives you a little bit of a heads up on Affirm. Obviously, it's still running pretty incredibly here. It's too expensive for me to buy at this point. I would love for it to go down a bit. But hey, you know what? All good. And yeah, that gives you a little bit on Affirm. Again, wouldn't be surprised for it to just keep running, but I'll also kind of hope it goes down so I can just selfishly buy some more. Okay, so what do we got as we go into the close of the day here? We got Blue Apron down 13%, TMC down 11.5%, Skills evaporating some more, lots of momentum evaporating here. Also with a weird sort of dip here on Dave & Buster's, not exactly sure why all of a sudden we've got this sell-off here on Dave & Buster's here at 6%. Then we've got Lucid down 4.7. Ouch. Very Good Food Company down 4. Lemonade's down 3.04. United Wholesale Mortgage continuing down into the gutter. I mean, United Wholesale Mortgage, gee whiz, it's just been getting burned. United UWMC stock. Wonder what the cap is on this. You've got a market cap here of about 10.36 billion. Yeah, they still got a market cap under their belt. All right, so let's go ahead and get the closing bell here.
0.5%. And then some red across the rest of the sectors. Real estate at the bottom of the pile, but only down by 1%. Summing up what is ultimately a flat day. The Dow is exactly flat as we approach the close. The S&P is down by 2% to 1%. The Nasdaq is down half of 1%, but all three of those sectors are higher on the week.
All right, we got the Dow basically flat, 0.03 to the downside. S&P down 0.21. NASDAQ down 0.51, and the Russell down 0.75. So everything ending today red. I love it to some degree here that it still gives you some opportunities to buy. I do think we're going to be at the end of these buy the dip sessions soonish. So still interested in trying to buy the dip whenever I can. I am right now. I just saw a headline, by the way, that Disney is potentially going to start charging people $15 per ride to skip the line. So if you wanted to go on 10 rides, that would be like paying somewhere around $150, and you get in there and skip the line. Now I last bought a bit of Disney at during the last dip. I'm gonna buy a little bit more Disney right now because why not? It's still a little bit of a dip position. So I'm buying a little bit more of the Diz if I can. I don't know if I can. I like the Diz, but I don't know if my Diz is gonna go through. So whatever. So my Disney might not go through. Oh, because Disney's all of a sudden going up on this news a little bit. Darn it. Oh well, it doesn't matter. If it doesn't go through, I don't care. It'll dip back down. Oh no, it did go through. Okay, cool. So just bought a little bit more Disney. And Disney's one that I've been working on building a position on anyway. This isn't really so much news based. It's just something that I just want to hold as a long. So added 300 shares of Diz. And when I make moves like this throughout the day, I always say whether it's long or what it is. This, for example, is long, but that would just give you an example of me buying a stock. And set an alert for it. I gotta get that alert out. Okay, there we go. Cool. There we go. So yeah, okay, good. So what else do we have? Then we've got yeah, let's take a look at how things closed, and then I gotta get going because I gotta get to Las Vegas. So okay, so we have how did things end up? Geo Open Door, HUD 8, Arrival. These guys Affirm up very nicely here. Plug Power, Gevo, JD, Canadian Solar. Good moves here. Let's go ahead and flip to the losses here. Really, Skills, Intelia, Blue Apron, Dave & Buster's, Hippo, Lucid. These guys down all 400 plus. And let's see here. That's why I was saying, yeah, it doesn't sound like that much. Most people honestly go through, in my opinion, like I would say, I don't know, maybe like 7 to 8 rides on a day at Disney, like because you spend so much time in line, right? And even if you could skip them all, like it just still takes time. So $15 a ride, honestly, it's not that bad. So okay, cool. Yeah, I mean, things moving well here. Still looking for some catalysts for Sheeb to potentially come back. Canberra Energy trying to do a little bit of a move here in the afters. Very nice. Matterport's coming down slightly in the after. Affirm sitting at 140.91 in the afters here. Obviously, after hours just beginning. So, all right. That's pretty exciting. A win sitting at 86. How'd Wayfair do today? Let's take a quick peek at Wayfair. Wayfair flat right now in the afters, and in the day, Tesla went down 1%. pretty much flat in the after hours. And Wayfair at down about 0.49% on the day. Oh, darn you. That's all right. But anyway, Disney's sitting around that 176 level. Under 180 for me, I think is fair. I think there's an easy 10% up to where this thing runs back to 200 as we get through the recovery. However, if, of course, we do have another Delta surge, I expect Disney would probably go back to 140, 150. Great company to own long, though, so I love it. So, okay, folks, I've got to run. Thank you so much for being here. Really appreciate you. Good luck out there, and see you in the next one. Make sure to join, get your free $70 with Public, or up to $70 by going to metkevin.com/public. They don't buy or sell your information. And check out the programs linked down below on Building Your Wealth. But always make sure you start by getting that free up to $70 by going to metkevin.com/public.